What if I told you that the best time to enter the stock market was at the height of the market crash? You might think I'm crazy, but it's true. If you invested at the height of the last market crash in 2008, the housing bubble crash, you would have made an over 350% return on your investment. If you invested at the height of the technology stock crash in 2000, you would have made a nice over 80% return in just a couple of years. For anyone new to the stock market, now is the time to invest. But the question is, what companies? What stocks are a good place to start for beginner investors? So, I've got a list of 5 stocks that are selling for great prices, but most importantly, they are great underlying businesses. So over time, they will compound for a nice return. The very first stock that was worthy enough to be put in this list is a stock called Alphabet. Alphabet is the company that obviously owns Google, the massive search engine. But they own more than Google. They own the platform that you're watching this on right now, YouTube. They own Android, the operating system used by so many mobile devices. And then, of course, they own a bunch of other companies ranging from artificial intelligence to self-driving cars to life longevity companies. They're an innovative and diversified business. And the good thing about Google is that they're in an industry that is growing and only going to keep growing. They're in the internet business. As you can see, this has just got larger and larger. In 2005, there was about 1 billion people using the internet. 2019, over 4 billion. And people are not just using the internet more, but they're spending more money there. So it's a very profitable sector to be in. And Google, they dominate this sector. In 2019, Google accounted for 75.74% of worldwide desktop and laptop searches. And when we're talking mobile traffic, Google has a much higher share at 86.11%. So in 2018, Google's search and advertising tools helped generate $335 billion in economic activity in the US alone. This company, it's just in an industry that is powerful. I mean, just look at the growth in YouTube over time. It's strong, you know. They're the second most used social media platform in the world, behind Facebook, who in themselves are a massive company. And then when you add on all the other businesses owned by Alphabet, it's just a powerful company to own. And price-wise, yeah, Alphabet have taken a big dip. They've given up 28% of their price, down from their all-time highs in February, because the economy is down. Nevertheless, let's keep thinking long-term. In the long term, businesses will pay for advertising like they have done for centuries. People will keep using the internet, and Alphabet will grow. Okay, now I need to move on to a stock that is actually owned by the great businessman Bill Gates. It has a fantastic recession-proof business model, and they're an all-round good company. The stock is called Waste Management, and they're a company that manages waste. What a surprise. The company's network includes 346 transfer stations, 293 active landfill disposal sites, 146 recycling plants, and 111 beneficial use landfill gas projects. Now the question must be asked, why do I like the stock, especially for beginner investors? You see, because the thing is, it does not matter what economy that we are in, people are still going to produce waste, and therefore they will still require the services of waste management. So the business model is sound. The key thing to do with waste management is to enter into the stock when it is nice and cheap. And I've got some good news for you. Waste Management have taken a tumble during the 2020 market crash. They're down almost 30% from their high of $125 in February. Again, we're adopting the same principle as Alphabet, buying a good quality company when prices are low. You know, they earn a solid cash flow. Earnings is $3.91 per share. They pay a nice dividend as well, $2.18, which gives it a yield of 2.39%. Another company that provides an absolutely vital service to the USA and Canada is American Water Works. They're a public utility company in both water and electricity. They have 7,100 employees, and their services expand to approximately 14 million people in 46 US states. Now, let's think about it. What type of companies have a safe business model that you would be more than happy to own over the long term? One business model that you can rely upon that is actually vital to the way we live is one that provides water systems and water and electricity. People are going to always, no matter where society goes, demand water. It's a human need. And you can bet your bottom dollar that they're still going to require electricity as well. At the moment, we're talking a stock that is down about 20%. It's very volatile during these times. But again, I'm not a short-term investor, so I'm not worried about short-term volatility. AWK, it's currently selling for a price of $113 per share, as you can see. The dividend is average, but I'd say safe at $2, giving it a yield of 1.7%. And when you're talking about their earnings and revenue growth, it's a pretty solid company. Earnings are growing steadily, same with revenue, and over the long term, the words that I'd use for this business model is steady and strong. I want to start this one off with arguably Warren Buffett's most famous quote. He says, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." But I say, why not get the best of both worlds, a wonderful company and at a wonderful price? And this is where Apple comes into the equation. I think we can all agree that Apple is a wonderful company. I mean, Buffett says so himself. Right now, the stock is down 26%, selling for a price of $241. But just 1 month ago, it was selling for $327 per share. So it's a nice discount. The dividend yield is 1.28%. Okay, that's solid. The PE ratio is sitting around 19. Again, that's another solid number. And it is still over $1 trillion company, just. So the price is nice, but the main thing that I want to say about Apple is it's a great company as well. It's a great business model. I mean, their main business, selling phones and technology, if you think about it, everyone's on their phone these days. And Apple is one of, if not the most popular brands to buy. Buffett says so himself. This smartphone is part of hundreds and hundreds of millions of people's lives in all aspects of their lives. And when speaking of Apple, he told CNBC that it's probably the best business I know in the world. Now, this might be one of my favorite stocks on this list, and it's actually another Bill Gates stock who is the largest shareholder in this company. CNR is a railway company that serves Canada and parts of the United States. They generated $14.9 billion in revenue in 2019, and they have over 24,000 employees. Now, the thing about Canadian National Railway is they're essential to Canada. They're a vital business because Canada need the raw commodities transported throughout the country, the likes of grain, coal, petrochemicals. These things are needed even with the situation that we are facing in the world. It's an essential service. And the other thing that they have is what Warren Buffett likes to call a moat. A moat is something around the business that protects it from competitors. And if you think about it, it's a very hard business to replicate. I mean, they have over 20,000 miles of railway track. Another business is not just going to come in and build all of that again. That's why CNR is a quality business to own long term for beginners. And the numbers look good as well. Again, it's a company on sale, down to a price of $107. PE ratio, 18, not bad. Earnings per share is $5.80, and they only pay out 40% of these earnings as dividends. This gives it a yield of 2.1%, but realistically, their dividend yield could go a lot higher. Now, the last thing that I need to do is talk a little bit about investing strategy. When it comes to buying these stocks, you got to play the smart game. Okay, we don't know when the stock market crash will end. No one knows. So when it comes to buying stocks, we have to be fully prepared that they could go down in the short term. That's why I think the best strategy is to dollar cost average your positions instead of just buying one single big clump of stocks. Okay, so if you look back at the history of the stock market and at the last 2 crashes that we've had, the best time to buy is around these periods here. The technology bubble crash. You want to be averaging down your positions as time goes on. Same with the housing bubble crash in 2008. And over the long term, the people who did this strategy, like Warren Buffett, they made a lot of money. So really, that's the key. Find good quality companies that you can understand. Buy wonderful businesses, as Buffett will put it. And build in a position with them when they are cheap. It's a simple approach, but the simple investors, like Warren Buffett, tend to get the best results.